Director of Future of Money at the Atlantic Council. Welcome to IMF World Bank Week. I'm joined here today for a great discussion on stablecoin regulations and their global impact. Joined here today by Faryar Shirzad, Chief Policy Officer at Coinbase, and Carole Howes, a non-resident senior fellow at the Atlantic Council and special advisor at the NSC, formerly for critical infrastructure policy and cybersecurity. Faryar, Carole, thanks for joining us, and let's jump right in. Faryar, as you know, for many years now, stablecoin regulation's been under discussion in this administration and in prior administration, but this White House and Congress have made it clear that regulation is coming, and it's coming now. Could you explain the significance of this for our audience today and what it signals for broader digital asset ecosystem?
Well, it all has to start on how much conviction you have about the technology. Crypto technology ultimately does something that finance ministers, central bank governors, regulators have been talking about at these IMF World Bank meetings for years and years, back to from when I was in government, and that is, how do you make the financial system more effective, more efficient, more democratized? How do you make cross-border payments not as clunky and complicated as they are? And crypto technology is ultimately the technology that allows you to do that. And stablecoins are the payment mechanism in crypto-based payments or tokenized payments. And so a lot of us have the view, and I think this is broadly held now, I think among a lot of policymakers, and Carole can speak to this, that tokenization of some form, that the movement of value transfer to token-based mechanisms is ultimately coming. And the question then becomes, what will the payment mechanism be in a tokenized future? And so our expectation that stablecoins will be the payment mechanism of the future. A lot of central banks around the world are experimenting with central bank digital currency, but the US is making a gigantic step towards putting its sort of the footprint of the dollar down in the future tokenized world by creating a regulatory framework around stablecoins.
Yeah, and this of course matters because 97 to 98% of all stablecoins in circulation are dollar-based. So having regulation in the US is very important. Carole, you've been a part of these discussions for a long time. You recently testified at the Financial Services Committee on the House side on stablecoin regulation and CBDCs. And your testimony, as I was reading it, focused on enhancing the trustworthiness of our existing financial system. Some points that Faryar raised earlier. I just want to get your perspective on how well will the current bills under discussion, the Stable Act and the Genius Act, address some of these concerns that you've laid out before, and what's missing and needs to be resolved in the next coming weeks?
Oh, that's such a great question, because I think it gets to tell both like a really positive story about the benefits of finally creating this clear and enforceable structure that has long been needed in the U.S. That you were speaking to, but also some areas that I do feel that there's room for improvement on, and where bipartisan discussions and negotiations over the past few years really created an opportunity for us to build further on, to put in place some of the protections that are needed for that trust, that I think will really help to drive some of the broader adoption that the crypto ecosystem is really wanting. So for this legislation, I do think that first, just the fact that we're going to get legislation clearly this year is a positive. We've needed this regulatory framework for a long time, for lots of different reasons, including whether you're concerned about issues of that there's actually a dollar backing something that is purporting to be one, but also other concerns around operational risk and cybersecurity, right? We just saw a $1.5 billion hack, not of a stablecoin, but in the cryptocurrency ecosystem, like things to make sure that we are securing the digital domain, including if we're moving all of our finance into that domain, and so much is happening there. We need to have those protections, and then of course for illicit finance and consumer protections also, which we've certainly seen hurt people in the wake of stablecoins that have collapsed previously. I do think that getting the framework is very important. We're going to get a lot of positives from that. There are some important protections on things like capital reserve requirements in like lower risk assets that are present in both the Genius and the Stable Acts, restrictions around rehypothecation of assets to make sure that we can protect consumers in that way and make sure that their funds aren't being used otherwise. There's references to things like AML and other issues that are included in there, but I do think that there's some opportunities to further build out some of the protections on countering illicit finance and AML protections that are not necessarily very clear in both of the pieces of legislation around what the rules are, what are the standards, to what extent that they are imposed on extraterritorial, like U.S. dollar denominated stablecoins, basically the basis of an America First test, right? Making sure that if you are operating a 24/7 instant settlement, globally reachable U.S. dollar denominated money transmission system, that you are not providing access to some of our greatest adversaries. So those are where I think some of the protections could be improved.
Thanks, Carole. I think one of the bills, also, apart from creating a regulatory framework, it also sort of clears who could be an issuer of a stablecoin. And it's been a part of discussion for a long time as well. So, of course, there can be bank and non-bank issuers, and states themselves can issue stablecoins, which we can get into. But a broader question I want to ask you is, do you see more issuers in the space once the bill comes out? And what about foreign issuers, the issue that you were just touching on, and U.S. jurisdiction over them?
That's a great question, because I think some of the key decisions that will be made that could potentially create a marketplace for a more favoritism type ecosystem for certain players. Some of those key decisions are the ones that will be made in the final weeks before this legislation gets passed, I feel. We don't want to create an environment where we codify in statute an environment for policy that creates a more competitive marketplace for those that are operating extraterritorially and outside of the U.S. versus American companies that are largely the most compliant in the world. So I want to make sure that it's an even playing field across the way. I do think that that will allow for more innovation and stablecoin issuers, even like smaller companies that are innovating in cool ways, even for internal business operations. And that's where I think that we'll get some more issuers. As far as more large issuers, I think that that's where there may be a space for certain consolidation, again, based on some of the decisions that get made.
I think that's right. I want to move on to the sort of global impact part of this discussion now. There's obviously a growing demand for US dollar-backed stablecoins, especially in emerging markets that have volatile currencies. And as you said, the payment use case for stablecoin is very strong. From a global perspective, can you help describe why it is that people want stablecoins? What's the use case for them in terms of what kind of payments they're making using stablecoins?
Well, it's important to talk about how big the volume of stablecoins is in terms of the market cap. There's something on the order of like 200 billion in circulation at the moment. I think the annual turnover, Carole might correct me, is something on the order of 2 to 3 trillion annually. So the volumes are gigantic. The vast majority of current payment activity involving stablecoins is really as a one leg of crypto trading.
Right.
So a huge part of what we're seeing in crypto at the moment has been trading activity, with stablecoins being a part of the trading pair when people are trying to buy this token or that token. I think what we're in the midst of right now is a transition point where we're seeing kind of more traditional commercial use cases and payment-specific use cases involving stablecoins. And that's where I think that it will be sort of a demonstrable, sort of dramatic uplift in terms of the volume of payment activity using tokenized payment forms. Because think about it, right now, if you want to do a cross-border payment, a wire has cost something on the order of $40. The amount of time it takes for the transaction to fully execute is measured in a number of days. Stablecoins allow you to do it. You can using the Base network, for example, which is one that we have at Coinbase. You can do a cross-border transfer in a penny, at a cost of a penny in under a second, at any volume. So the scaling, the security, the cost is with us. And so what that does now is create a huge opportunity for people who want to modernize payments. And that's why you've seen JP Morgan, you've seen Stripe, you've seen a lot of PayPal, a lot of traditional players who are moving into the space because they see the payment opportunity to be a disruptor of a system that fundamentally doesn't work well. So there's going to be a range of use cases, and I think payments are going to be the big one we'll see next.
Right, and as you're referencing remittance payments and moving money faster across borders just for trading purposes, holding purposes, all the sort of functions of money that currently fiat cash does. This is a question for both of you, and this goes into a little bit of how the administration has postured stablecoin regulation. In the executive order that was issued in January, there's a connection made very clearly on promoting the use of US dollar-backed stablecoins to promoting dollars abroad, right? There's an event we held with Governor Waller at the Atlantic Council where he said, if people want access to dollar-like instruments that are backed by the US dollar, that's all right. We want people to have them, and that growing demand is actually a good thing. I'm interested in both of your perspectives on how the dollar can be promoted or preserved through dollar-backed stablecoins, and then whether you see any risks emerge out of that. Carole, to you first, and then Faryar.
That's a great question, because I think it hits at some of the heart of some of the issues where I don't think that there's been enough really examination on some of the economic implications of it. But since the space is still nascent, I think that we can address it. So first, I'd say that I like the immediate answer is, oh yes, of course, if it's US dollar backed and if it's properly regulated, if there's actually a dollar truly backing it, and we're following things like basic US law and sanctions requirements, then then you're right. If we're providing that globally reachable, instant settlement, peer-to-peer, U.S. dollar denominated transfer system, that is providing access to U.S. dollars to a whole host of populations that normally wouldn't get direct access to that. So the benefits that you can get of democratized access through decentralized networks is that if we want them to get access to the dollars, then good. But those protections need to be put in place. We need that dollar for that to be preserved and strengthened. It needs to mean a dollar, and for it to be a dollar, it needs to mean something like that. We're not providing access to some of our greatest adversaries to be able to use it and to hurt Americans, which is some of what we're also seeing in crypto when the risks aren't mitigated. But it can extend the reach of our AML framework, extend the reach of our sanctions controls, and also continue to raise the desire for U.S. dollars. I do think, though, that over time, as this gets more and more adopted, like we haven't in TradFi taken the position that we wanted the U.S. dollar to be the local settlement currency around the world. We like it as the global reserve currency, but I think, as more stable coins come out and other currencies, like will they be allowed to be accepted in the U.S.? Like over time, seeing how policymakers start to feel in the long run, I think on how that looks is going to be a really interesting space for examination.
Yeah, Faryar, on the role of the dollar abroad and stablecoin regulation. Anything to add there?
Like I said before, if you have conviction that the future is going to be tokenized, that essentially the internet that allows you to transfer data will be updated to allow for the transfer of value just as easily as we move data, the payment currency of the internet, of the value-based internet, will be token-based payments, so stablecoins, potentially CBDCs as well, although there's technological and other reasons why they may not fully be adopted in the same way the stablecoins will be. And right now, if the dollar is the primary show, there'll be a massive push to further dollarization of the global economy. And that's something other jurisdictions have to think about. And we say this when we talk to officials from other major economies, particularly those with significant currencies, G7 currencies and others, that they really have a decision to make. They either participate in this and make their currencies relevant to what will be a tokenized future or not. And if they don't, I think the dollar's preeminence will even amplify, and it'll raise potential concerns that other countries will have with dollarization and things of that nature. So I think it's a live issue and worth watching.
Yeah, I think as we're creating a regulatory framework that largely addresses domestic need for clarity, there's also ongoing discussions abroad on how to address this regulatory clarity that's coming from the U.S. and the sort of ripple effects it's going to create.
One thing I would say, Ananya, that stablecoin issuers right now, I think, are the 16th largest holder of U.S. Treasuries. It's extraordinary. Think about it. Stablecoin issuers at the current moment are the 16th largest holders of U.S. Treasuries. So when you have a U.S. government that's looking for protecting the strength of the dollar, but also finding more customers for the debt that we're running as a country, stablecoin issuers are a very relevant part of that equation in terms of how to solve the issue that we're facing as a public policy dilemma. And it's interesting to see policymakers, Democrats and Republicans, now understand that it's not just a matter of kind of a novelty. It's becoming a central part of the financial system, and they need to create a clear federal framework to deal with a lot of things that Carole legitimately has raised.
Yeah, and then there's a systemic risk issue here as stablecoin proliferate even more and become a part of traditional financial institutions and their own markup. You're going to have to consider some systemic issues that are at an international scale.
Cyclicality, all these
exactly.
Things, like the great efficiencies that you get from digitization can also
create risks.
So we just need to mitigate them. Programmable stuff is great. Program it with protections.
Of course. And obviously there's been issues of bank runs and things that have happened before with stablecoins. So that's a model with which we can work on. It's not like this is completely uncharted. Do you see any role for U.S. here, Faryar, through this legislation, through other movements, to set a standard globally for what stablecoin regulations, what issuance looks like, what reserve requirements looks like, things like that?
I think so. I think what Carole said in terms of enumerating the things that we all would want to see in a legitimate stablecoin framework are actually kind of low-hanging fruit. I mean, for a guy who's was doing bank regulatory stuff for 15 years before I got into crypto, in crypto world, this sounds novel, but for those of us who've been in this space, the idea that you'll have audits, transparency, reporting requirements, liquidity standards, capital requirements, all of these are sort of basic, and then redemption rights. So if you're a consumer and you own the token, you have to have some confidence that you'll be able to redeem the token, get the dollar back if you choose to do that. And all of that will promote adoption as people sort of get increasing confidence in it. But it's worth saying, $200 billion of market cap at the moment, something like $2 to $3 trillion of annual turnover. So adoption has happened, but to take it to that next level, the kinds of things Carole's talked about are really important.
Yeah, and payments networks, as we all know, are a value volume business. Like how much it matters ends up being about how much money there is in it.
Yeah.
Carole, we were both together in Japan a few weeks ago talking about similar issues. I want to get your perspective on stablecoin regulations coming from other jurisdictions, like MiCA, like Japan, like what's ongoing in the UK. Where do you think our current regulation fits in there? What sort of reciprocity needs do we need to create?
Oh, that's and it's a tough issue because of course, like each jurisdiction with sovereignty like has their own like specific controls. I do like the fact that we've been leaning in on in some of the drafts of this legislation, pointing to the need for reciprocity, which will help to enable some of the competitiveness for U.S. companies as long as they meet those tougher standards in the first place. I know that like MiCA has pretty tough like stringent requirements. Like while many in industry were saying yes, good, we've gotten clarity, a good pathway to registration and supervision, but also really tight requirements that are in there. I think that the U.S. regulation isn't quite as stringent. I don't view the requirements nearly as comprehensive as the MiCA requirements. There are some very strong provisions, and there's some areas where I think that there's like just not sufficient focus on consumer and market protections, as well as certain specifics on AML. So I think that ours fits on some of the looser side of some of those stablecoin requirements that reflects the administration really wanting to focus on promoting innovation in the space. I think we want to make sure that the guardrails will ensure that innovation is done so responsibly. So on the reciprocity that needs to exist, I think that what we would hope for is that we don't face concerns with U.S. dollar denominated stablecoins being issued in other jurisdictions and facing non-competitive practices being put in place there for our systems. But ultimately, this is going to be a kind of a tough issue to negotiate with these jurisdictions.
Yeah, Faryar, as someone who operates in this ecosystem and has to find a balance between different jurisdictions, what would you like to see in terms of reciprocity on your end? Across jurisdictions?
I mean, what I would say is actually as a starting point, countries have to make a decision about whether they embrace tokenization or they don't embrace tokenization. And if they do embrace it, what they want the payment mechanism to be. And I think a lot of the jurisdictions that have regulations out there, the stringency of the regulations is less about consumer protection. It's much more than unleveling the playing field in favor of a central bank digital currency, which I think is the public policy underlying what you see in some of the jurisdictions that have very tough requirements. They're very ambivalent about the development of a private sector-led model of tokenized fiat issuance. And so in that regard, they create regulations that don't actually get to the security of the underlying stablecoin.
Right.
So MiCA, for example, has requirements that you have to hold the reserves in a multiplicity of European banks. Arguably, there aren't, the banking sector in Europe's not actually developed at a scale that would allow enough reserves to be held, that there are enough banks to hold all the reserves if there is as much adoption as a lot of us think there will be. And so there's sort of kind of fundamental questions about whether you're in or not in terms of a tokenized future, whether you want stablecoins to be a part of it, and then I think the policy flows from them.
Right. I think you're addressing something which comes up quite often in payment systems, which is like, are these different kinds of payment tokens, essentially, CBDC, stablecoin, crypto assets more generally, tokenized bank accounts, are they in competition with each other, or do they exist sort of across the spectrum? Carole?
So I think that there is a lot of complement. Like we've had private and public forms of money for a really long time, and which things represent like liabilities on whom and the functions in which they serve. I think that there's a great opportunity for innovation in this space. And honestly, there's some rightful skepticism in jurisdictions towards stablecoins because most of the adoption that we've seen really has been about settlement and speculative activities. Now, I agree. I think that a regulatory framework will enable the trust that can allow for some of the growth in use and experimentation on actual payments in exchange for goods and services, which has certainly happened. It's not happened 0 times. It's something that needs to grow, and the ability to have guardrails to allow for that consumer trust, I think, will foster that kind of innovation. But I also view that stablecoins are also a catalyst for innovation in payments generally. Because ultimately, whether I like tokenization for a lot of reasons, there's also some very real challenges that come from publishing transactions to public unobscured ledgers and lots of other things, like challenges that come with the technology. I don't think that we should prevent innovations in the technologies, but allowing for these spaces to outcompete each other and let stablecoins let's like prove that use case in payments, and also let the TradFi space try to outcompete them. I'm excited to see what this competition brings.
I mean, the Fed, which created FedNow system, which is an RTGS system, a fast payment system for the U.S., said that it's going to take about 10 years for it to prove itself. I would like to see that level of allowance for every kind of payment network that we create in order to say that we've proven ourselves.
Well, I mean, on that point, it's actually important to note that the Senate version of the stablecoin bill actually enumerates a number of extremely highly regulated payment activities that by statute are permitted in the stablecoin bill. So, used for collateral management, for derivatives trading, as a cash equivalent for bank purposes, and for interbank settlement purposes. It's an extraordinary leap from a public policy perspective, but it's also an extraordinary leap in terms of use cases. So, Carole's right. A lot of crypto has been, stablecoins have been used for trading purposes, and then we're going to transition dramatically into not only payments, and we typically, when we talk about payments, we talk about remittances because it has a very intuitive dimension to it. But if you think about the most regulated of payment activities being enshrined into American law, where you can use a stablecoin to do that, I think it'll be a supercharge in that sector. And then there'll be a question about what the global architecture allows. There's been some effort on the part of global, the BIS and others, to essentially presume that you'll have a closed loop network for tokenization. By implication, a CBDC would be the payment currency of this closed network. I think from our perspective, just like there was a similar kind of inflection point with the internet, where there was a closed version of the internet and the open version of the internet, and we ultimately settled on the open version of the internet, and we all take it for granted, and we build security infrastructure on top of it, and we sort of live with it and embrace it, governments use it. We're at the same thing with crypto technology and stablecoins. Are we going to have an open network or a closed network? And will private sector innovation drive the change, or will it be government led? And I think the answer is almost inevitably going to be an open network, government, private sector led innovation, and stablecoins as the payment mechanism.
I do think you're going to see maybe differences across jurisdiction from that approach. The challenge here is how do we harmonize some level of private sector innovation is encouraged everywhere, and we don't create anti-competitive frameworks in any jurisdiction or the other. Just because we've gone back to the legislation, I want to talk a little bit about the role of state versus federal regulators here. New York TFS and Wyoming and Utah and California have been regulating quite a bit of the crypto asset ecosystem in one way or another, in addition to certain agencies that have been doing it as well. How do you see that evolving over the next, as the bill comes into the fore? Carole first.
Yeah, and I know you guys have dealt with state regulation for a very long time. It's interesting to see the different approaches that come underneath the different legislation, and I think that's one of the core issues that I think is going to be some of the final points of debate and discussion for this, which is, do you allow for a state-only pathway to exist, or must they, like in the Stable Act, where you can have non-bank but federally approved but still like state, primarily regulated issuers, versus in the Genius Act, which is the Senate's version, you like under $10 billion you can just operate with a state charter or license. I think ultimately that people that draw a corollary to the two-tiered banking system, I am sympathetic to at least for past a certain size, these issuers needing to have a federal line of sight. That was something that I testified to, because we don't let state chartered banks provide global reachable instant settlement, like peer-to-peer US dollar denominated money transmission, without having some kind of federal agency saying, yep, you can open up, you can open up a branch or whatever in another jurisdiction like that. There is a role that we have at the federal level for that kind of oversight and activity, and I think that we have to have the federal hook for especially the really large issuers that operate inside of this space. So I think that that's where we're going to end up coming down, and then seeing sort of where it sits between the Fed and the OCC. Again, taking different approaches. One OCC only, and the other some Fed and some OCC. I suspect it'll be much in favor of OCC, just based on what I'm seeing on the Hill. But on the state level, I do think we're seeing certainly Wyoming is pursuing their stablecoin. But I think that I think that the federal pathway for oversight on the really large ones will be preserved is what I'm hoping for, and I'm just going to take a gut guess that that's what's going to happen.
Faryar, do you have a perspective here, state, local regulation?
I do think we need a two-tier issuance model, just like you have a two-tier banking system. But I think Carole's right. There has to be some federal breadth of oversight. And that exists. I mean, there are mechanisms that we currently have in law, like the FSOC, and the Fed has, at least I forget which of the bills has exigent circumstances authority to step in. And so I think some dynamic in between the two I think is healthy.
Right.
But I think having a competitive dynamic and you have, just like you do in banking, a two-tier system, I think is ultimately where we want to land.
Right, and as you said before, actually, this is the first time some of the stablecoin issuers are going to have to do and understand capital risk, liquidity risk, something that traditional finance has been doing for a long time. How would you best prepare for that to happen?
Well, one of the big risks they have to watch for is banking sector risk.
Yes, exactly.
I mean, the big sort of blow-ups that we've had, I mean, there have been sort of these algorithmic stablecoins, which are sort of a different animal, and the word stablecoins probably isn't appropriate in terms of describing them, but in terms of traditional stablecoins, the hard issue is where you hold the reserves and the credit risk associated with the underlying institution that's holding the reserve. So I think that issue has to be kind of worked out as well.
Yeah. Carole, you've alluded to this before, which is AML, CFT. FinCEN's been involved in this for a long time. You've worked on this issue for a very long time as well. What does international cooperation on that look like right now? Where do you see it going? Do you see it getting better? And how do you see it impacted just by accelerating actions?
Yeah, so first I'll start with the positives in that I think that the FATF, and I was the lead for FinCEN to the FATF, but working with the rest of our great Treasury and the rest of the interagency in the U.S., the FATF has been leading the way on setting the standards for virtual asset regulations or standards generally. And I think there's been a lot of cooperation that we've had with other jurisdictions trying to understand and learn from them. Our greatest challenge was jurisdictions asking for us to put in place a framework because they felt they were waiting for us as to set the bar for good reason, right? Like we play a huge role in the financial system. So I think that us finally taking up this torch and actually passing this legislation will be part of us meeting that call for international cooperation. However, there are many jurisdictions where these things have been where parts of the crypto ecosystem, including stablecoin operators, have been operating without meeting stringent requirements, without, it's very clearly that they've been operating without having the same kind of strict standards that U.S. regulated, whether under a BIT license or other kinds of frameworks, making sure that they actually have dollars that are backing these things, making sure that they're actually protecting their consumers, mitigating a lot of other risks, including on the AML side, since this is really at the heart of what I did. I am concerned also that on the U.S. side that it looks like we're dismantling a lot of the enforcement side of things, and policy is good, but if it's not enforced, then we're not if we're not enforcing against the worst actors in this space, then we're not in fact enforcing the competitive landscape that we want to create for the most compliant actors, like arguably many of the US firms being the best actors in the space. If we feel that way, if we believe that, we need to enforce this policy. So I'm worried that if we don't enforce that, that's not us meeting the call that's needed to be part of this cooperative on the international front. Also, there's still many jurisdictions that have not regulated or met the FATF standards. So we need to enforce that. The FATF should focus on implementation more than updating policy. I love policy getting updated, and I love the folks at FATF. I really hope that focusing on implementation of Recommendation 15 and things for virtual assets will be a huge priority.
Right, thank you. I'm going to move towards concluding the panel. So we've discussed quite a bit of issues today, but despite all of the risk that we've talked about, there is going to be stablecoin regulation happening. Once we have regulatory clarity, what's next? What are you looking forward to next? Carole first, and then Faryar for the last word.
Well, the enforcement piece. I hope that we do enforce and actually implement and apply that framework. We should hone the enforcement strategy to be something like prioritized against the most egregious violators in the space. So I think that enforcement, and then otherwise seeing what the innovations are in tokenization and also not in tokenization. I'm looking forward to seeing what that competitive ecosystem for trying to provide global instant access to dollars, whether in wholesale or in retail, what that ends up looking like and driving, and seeing who wins. I'm excited.
Thanks.
Yeah, I agree with that. I mean, the thing that we're very focused on in the U.S. at least is to get market structure
Yep.
legislation alongside the stablecoin legislation. So stablecoins critically important because it creates the rules around the issuance of stablecoins, dollar-backed, fiat-backed stablecoins. But you need the second leg of that, which is the rules around what the trading of crypto tokens ultimately looks like. And as we've talked about, if you think the future is going to be a tokenized world, the role of the SEC and the CFTC have to be clarified so that they know what their respective responsibilities and obligations are. Innovators know what is expected of them, and consumers have a clear sense of protection in terms of how the markets operate. Those two things are very symbiotic. President Trump has asked Congress for legislation by the August recess. And I think all of us hope that will happen, and we'll have a clear federal framework to build off of.
It'll be interesting. With multiple committees of jurisdiction, I know that it's gonna be so tough. And I love your point on stablecoins, low-hanging fruit. It seems like that to be the easy one. I hope that we can move somewhere on market
We've certainly
structure.
seen stablecoin legislation to be the low-hanging fruit. The challenge is we need to do the next bit of this, which is much more complicated. But thank you, and that's a great note to end on. Thanks both. Thanks for being a part of this today. And thank you all for joining us for this panel. Our next session will be tomorrow at noon. We're going to be talking about the Plaza Accord with Saleha Mohsin of Bloomberg. Thank you all for joining, and have a nice day.